Good time to get in Siddharth Sedani, who's the Executive Vice President and Head Equity Products and Advisory at Anand Rathi Shares and Stock Brokers. Thanks a lot, Siddharth, for joining in. Wish you a very happy new year. Your thoughts on the auto sales so far and the auto stocks for this year?
Wish everyone, and including you and everyone, happy new year. This year will bring a lot of fireworks in the markets on the upside. With that, thanks for having me on the show. Talking about Autospace again, a big underperformer of last year. We believe now this space may see a strong revival. If I talk about the sales numbers, where we have seen a mixed bag or maybe negative sales numbers in the two-wheeler pack, whereas positive in the passenger vehicle space, especially from the Tata Motors end. On the commercial vehicle, we are very positive. We've seen Eicher Motors jumping with 17%, Ashok Leyland seen a jump of 45%. So in a way, we are positive with commercial vehicle, and with commercial vehicle, we have Ashok Leyland as our top pick. And we believe the kind of volumes will be clocked from here on for next 2 years will be phenomenal for Ashok Leyland. So Ashok Leyland is our top pick. On the two-wheeler space, we are very selective, and in that selective, we are looking at something like TVS Motors with a long-term perspective around 1,300 target. We believe the kind of contribution they've been doing in the EV space, iQube has been really a super hit product for them. So we believe the volumes of iQube, the EV space, will be strong for this year also. So TVS Motors, and with that flip side, we even like something like auto hangs like Gabriel India, or for that matter, NRB bearing in the auto ancillary pack. We believe the auto revival will see a benefit to auto ancillary. So all in all, 2023 seems to be a revival year for auto.
All right, a revival year for auto. Siddharth, just hang in there. You've given us a couple of stock names out there as well. You like Ashok Leyland, you like Tata Motors, you like TVS Motors, Gabriel, as well as NRB bearings. But
okay, all right. Well, so that's about metal prices and metal stocks as well. So that's Sedani is still with us. Siddharth, what's your view? Sell into this rally, or do you believe this is the real thing? China is going to reopen and these prices after bouncing are going to hold at these levels. What's your take?
Well, Nigel, none of them, because I am neutral to positive on the metals because of, as you say, November 2021. From that month onwards, we've been seeing a rub-off in terms of metal prices, especially HRC prices and steel prices in the markets. And now we see it seems to be arrested. The attributes which you spoke about, amongst that, the most important attributes is raw material prices like iron ore pellet prices are going up, and that will bring in little better than strong prices of metals. So I'm neutral to positive on the metals, very selective in metals, although being a commodity, global commodity, one bad news will shake up again the entire sector. So I would like to be very selective, not going broad-based buying in the metal space, only selective, and that too only with Tata Steel. The giant of all steel, deleveraging is strong with them, with that capacity expansion is in front of them, and they have a more stable pricing than any other player in the market today. So Tata Steel with a target of 146 looks the most interesting in the metals. I would not like to maneuver around buying some non-ferrous space which is sensitive to the global news. So I would like to stick to Tata Steel with a target of 146.
Siddharth, do you look at MCX? The stock has taken a big knock. It's down close to about 6%. We've been talking about MCX since morning, but the company was expected to transition to the TCS software in Q1 of FY23, and it's this transition to TCS software, which once done would have lowered the cost for MCX, has been persistently getting delayed. Now it's extended by another 6 months. So the street is very jittery about it, and the stock is down close to about 6%. Do you look at MCX and what's happening there?
Well, Rima, we don't cover MCX, neither we have a report on this, but as you said, the delay of implementation of the software, added to that, I would say the volumes which is shrinking. If I talk about the average daily turnover, was down on a month-on-month basis to the tune of 8%. That is also one of the reason and attribute for the stock to fall. For the months, if these kind of volatility will persist, again the volumes, average volumes will go down. So I believe, and because of that, there are a lot of downgrades in the market. So I believe one should avoid MCX as of now. Let the downside be arrested. Further downside is also possible because the kind of a weak note it is in.
Okay, all right. So that requests you to stay on with us. For the time being, we'll slip into a short break. The markets are stable with a gain of close to 50 points. We'll talk all things stocks as well as markets. Saurabh Mukherjee of Marcellus Investment Managers will be joining in. We'll also highlight a couple of stocks that are moving around. Okay, all right. Thanks a lot for that, Ekta. Well, Siddharth, what's your take on this one? Piramal Pharma, the stock listed 190, 200 rupees odd. Valuation wise, if they can achieve what they are talking about, second half of the year, the EBITDA will improve. In the next few years, they're talking about bigger numbers in terms of EBITDA. It could be 2,000, 2,500 crores odd. What's your sense on the stock or any other pharma stock that you would rather prefer?
Well, Nigel, I would like to prefer Piramal Pharma because of the biggest reason is the product profile. Vitamin A, although they are a sole producer and benefiting out of the news which Ekta spoke about on the anti-dumping duty. But overall perspective, I think the larger the product pie is better for me. And I am looking for a direct API manufacturer, which I am very positive on. I am not going into formulations or CRAMS business as of now. I am directly going to the APIs, and that is Divi's Lab. Divi's Lab is one play which I am very positive on, although unfortunately the last quarter was a miss in terms of expectations are concerned, but I think I'm very hopeful for this quarter, and Divi's Lab seems to be interesting from here on. Added to that and followed by Granules India. I think Granules is also one play on the paracetamol space API / I think they will also get strong volumes in the times to come. So API is the main focus for me in the pharma. Divi's Lab followed by Granules.
All right, Divi's and Granules. Divi's, of course, was one of the big underperformers of 2022. Let's see how 2023 pans out for them. Siddharth, we have the result season dawning upon us, but before the result season, we have the pre-results updates coming in. And in that, some of the notable names, we have the Bajaj twins, HDFC twins, they report their pre-quarter updates. We have Titan, which reports their numbers. We have Kalyan Jewelers, all of them likely to put out their numbers in the next 7 to 10 days. Your thoughts, which one would you play for in this, and which one do you think stands to benefit the most in the third quarter?
Well, I believe Bajaj Twins can give better than expected numbers. We've seen the festive season came up, and this will bring in volumes for them. Added to that, in the NBFC space, we are very positive on the platform-based business like Chola Finance, where 20% of the business is coming from the platform business, and the kind of disbursements and volumes, the percentage disbursements we've been seeing, it's phenomenal. So platform business in the NBFC space, like of Chola Finance, mainstream banks like ICICI Bank, which we are very positive on the BFSI space, because it's an obvious reason the kind of performance we've been seeing since last 8 to 10 quarters is phenomenal. The kind of advances they're talking about from here on around 20 to 23% is something which is achievable. Slippages are under control. So from this entire scheme of things, Bajaj Twins is positive and promising. Added to that, Chola Finance followed by ICICI Bank.
RBI releases the fortnightly update on the lending, the credit as well as the deposit numbers, and the latest numbers which came over the weekend were for the fortnight ending 16th of December, and the numbers are very strong. The credit growth for the banking industry was 17.4% up, while the deposit growth was just up 9.4%, which basically means at least for that fortnight, the net interest margins are going to remain intact, very strong, and the credit growth continues to be very strong. 17.4% was the credit growth for the fortnight ending 16th of December. Siddharth, thank you very much for joining in and sharing your views. Let's get and talk about some more stocks. It is the first trading day of